Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I'm going to go over some of the things of why I'm bearish. You can see the advanced decline line has made lower highs here. And actually, you see the last couple of days, it's even turned down, even though the New York Stock Exchange Index did make a 3 drive to a top pattern, making a new high. Okay, that's one thing. The second thing that we want to be looking at here, and this is, I think it's important, and that is we've got a massive bear market going on here in Bitcoin. Last night we had a little pullback, went back up here a little bit, but this is still in a major bear market, and it's probably going to go down to about 50,000. As a matter of fact, the number that Jeff Hughes was looking at, if you'll remember, he's looking at around 10,000. Folks, it went from $100 up to 20,000, then it dropped $17,000 to 3,000. That's when the Merc brought it out. There was your first 382 retracement. Look at the 3 drives: drive 1, drive 2, drive 3, and we're rolling over. This is, it's almost like artificial intelligence. Everybody knows everything about it. Look at those stocks. Other than Google and a couple others, these stocks do not look good, folks. That's the main thing of paying attention to what we're watching. Okay, all right. Here's to me, this is the most important chart of all. I'm probably wrong, but this is the debt. Okay, this is the dot-com bubble. Debt, margin debt was 300 million here in, it's 150 million. This one here was 100 million, I believe. And look where we are now, folks, $1.2 trillion. Look at that. I mean, that's just absolutely scary, amazing. Then there's another one that's really important. If we look at these things, you'll see that we'll be able to look at this. Hold on here. The volatility index. Now take a look. This comes from our good friend T West. We'll get this up here. Move it here. Now here, look at the perfect A, B, C, D pattern right here. This is September 1st. Look where we are right now. Nobody's going to buy it today. Well, they're buying it because it's up almost 2% already. That's a perfect A, B, C, D, and this is people they had not bought any insurance for a possible dropping market. And then you can see it doesn't always follow along stocks, but when you have that perfect symmetry and you like A, B, C, D, and you like 3 drives to a top or 3 dives to a bottom, you'd have to like that one, I would think. Okay, so we'll get that one out of the way, and a couple others in here that I would like to explain to you folks. You can see this movement here in the transportations. Folks, this is not correct. I know this index is doing this, but it really shouldn't be doing it. I did a special video on it. I went through all 20 issues in the Dow Jones Transportation. Folks, the top 6, the one in this cap weighted, the top 6, 3 of them are in bear markets. You know, you're looking at Union Pacific and FedEx and UPS. I mean, they're all in bear markets except for one stock, and the name of that stock is Expedia, and I think I put it in here. Let me see. Maybe I didn't. Nope, I didn't do it. I should have probably, because I don't really follow the transportation. But anyway, that index is actually skewed, and that's why it's so really hard to figure out, what you're looking at some of these things. But there's so many things that we have to get back to talk to why I think this market has had such a possibility of some real negative things hitting it. The VIX index, the advanced decline line, the Bradley model, the fact that all these AI stocks are, a lot of them are in bear markets, like NVIDIA and some of the others, the big ones. Not Google. Google's still looking pretty good, but that's pretty much it. Plus, we got that margin debt. Well, those things are scary. And if the market goes above 69.04 in the S&P, look at the NASDAQ. It come back already This is good. It's jumping around. This is what we like to see. Let's get these charts up so you can see. There we are, right back to that 382 again here in the NASDAQ. So it's jumping around, 50, 60 points at a time, which is good. And that's what we like to see. Now let's take a look here at the market that just keeps on giving. And we'll come over here. You can see the E-mini. We just made the 382 in the E-mini up here at 68.60. And this is where, if it's correct, it should start going down here. So 68.60 is your 382. There's the fit has been very good today. And so if it's right, it should start down. And if not, it won't start down. That's bottom line. Now let's look at the gift that keeps on giving, folks. We talked about this in the video over the weekend, and it just keeps on giving. Look at the Treasury bonds, folks. Look at this. 382 today, 382. Almost $1,000 move down here. It just keeps going lower and lower. Of course, the Fed's coming in on Wednesday, and they are going to drop rates, and it's going to rally from there. But believe me, folks, if it doesn't rally, see that big 382 right here? If it doesn't rally, my goodness, what's going to happen? So it should. But here's where we are so far today. Just looking at the 60-minute, we're going to go down to 13 minutes to see if it's made another 382 here this morning. And I don't think so, but we're going to double check it just for kicks and giggles. There's your first one right here. Yeah, by golly, we just did. We hit another one. We hit this one this morning real early. That was at 382 off of this one right there. And you went back here and got these others. They've just been straight down 382s. And strong trending markets, it's like a broken drum. You can't beat it. That used to be the name of a restaurant in Santa Monica, California. Very famous place right off the beach. Anyway, let's move over here. That's since gone to the way of the way of the warriors. Anyway, we're going to take a look here now at the crude oil market because it's come under some pressure. Here's where we were today. I was tried along in it here early this morning, and we did go up, and now you can see we've been coming down quite a bit. Let's move over and look at this on a smaller time frame to get that out of there, and you'll just see how it's been coming down, following the patterns, just like we always do. You can see that we are in a downtrend because we have lower tops, and move that over, clone it a little bit, and we have lower bottoms. So that's what we're watching. The market's headed down. You can see each one of these, there's a ABCD pattern right there. You don't quite make a new high, so you can't make that as an ABCD, but you do have one right here. In fact, you have a double. You have an ABCD pattern right there. And with that big bar down, you have to extend that out by a little bit. And it will do that, and we'll bring it up and show you. And then I think we got an ad coming in here that we'll take care of, and we'll get back to talking about the crude oil. Remember, Bill Meridian is very bullish crude on a longer time frame, so we want to be watching that. Bill is very smart, and he's got some great cycle work, so we want to be able to make sure that we're looking at that, quite easily. Okay, so those are the main things that we're paying attention here today. And let's get back here to 1 second and put the daily up. And we come back from the break, we're going to talk about this on a little bit longer time frame, because there is our crude oil, and we want to be watching that. And we're also going to be talking about soybeans. So stay with us, folks. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, here's crude oil, and when we finish this, we'll move on to the soybeans complex. Someone asked the question, is this a three-drive pattern in the crude oil? You can see it makes a 61% retracement on the long-term daily, going back to October 28th. That was spot on right there. Hit the exact number, 60.47. Remember, mathematics precedes geometry. This is geometry. This is mathematics, and it's just repeating what it did before. We've seen this in the euro. Same type of thing. It's the same type of pattern. That's all it is. Little A, B, C, D. Here's where we are. Now we're in the midst of a correction. Now you can see we've come down about $1.50, almost $2, $1.50 a barrel already today. So that means we are going to come down some more. So we start looking at numbers of where we might get to. We don't have any pattern in here as of yet. We went through the 382 like it didn't exist, okay? I think we might have made a 382 right there. I don't think so. Let's just double check for kicks and giggles. Coming down, I've been busy with other things. So, yep, by golly, we missed it by just a heartbeat. There it is. Misses it by, 4 pips. So that means we are heading down. That tells us we're going to go to at least right here, which is down another half a buck at 58.40. That'd be down $2 a barrel today, and we'll see. There's your ABCD coming in here. You can't count it because, well, you have to count it because it's a definite swing. It just misses 382. So if you go to your high to your low, you'll see it's going to take you right down to the old number that we're looking at right here. Is around 58.40. That's going to be really important. Bringing it up like this, moving it over like that. There's where we'll be watching it, you see, and that's going to be a really nice pattern because at that time, you're going to be looking at this move right here, and look, there it is right there. Holy moly, guacamole. You can't make this up. There's where you want to be looking to buy it, folks, right there. Now, if you like this kind of pattern, you're going to like this one, and I haven't looked at it since this morning, so let's take a quick look at January soybeans. We'll get this up here right now so we can take a look at it. We want to get it up here on the daily basis and see if it held that magical 1190 number. And by golly, look at it has. It sure has. It stayed right there. The number was 1191, and it's already up. Oh, my goodness, folks, it's up 75 American dollars, almost enough for a hot dog. Anyway, that's what we're looking at here in beans. They should hold. Now, remember, we were watching the meal, and the meal was the one that we wanted to be buying. We're in March meal now, and that was coming in at 307. And you see it has not reached 307 as of yet. See, there's our number. We want to be a buyer at 307 with a stop right below here. This is a bull market. Okay, now it's already come down through the 382. We talked about that just a few days ago. That it had that little rally here, which was exactly 382. If you looked at that real closely, you see that's a 135 pattern. You have lower highs, lower bottoms. That's the one you want to be looking for, because there's your 382 retracement, just rallies 2 days, hits it, and that means we're getting ready to get to this level right here, right around 307. Wow, that one says, 307 is what you'll be watching, because that's your 50% ABD. Your 61 is right here. That's where your stop has got to be. Sorry about that. It's got to be below the 61.8% percentage, which is at 302. So your stop would be at 3. Okay, and also we have that big gap in here. Yes, go ahead and remind me. That's where we got out of our longs. But anyway, that's what we're paying attention to. Let's switch over here for just a second here, and we'll take a look at the meat market. I always follow cattle. Cattle's been very bullish, folks. So we're going to see if we catch anything today that would have been interesting to us. We're now trading the February cattle. We'll go to the hourly chart and see what it looks like. And we're still bullish. It's still going up. Just take a look at it here today. We had that beautiful bottom down here. That was a major, major bottom on the long-term dailies. Well, let's show it again, because that's where ABCD comes in handy. There's all the bottoms. Look at that. Bang, 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 right at your 786. You got A, B, C, D, A, B, C, D, A, B, C, D right there, and we've been going bonkers up. Oh, we gapped up today. Look at that. And guess what? Let's see where we are on the old scale here from this high. I wonder if that's going to be a number. Probably is, right? Yep, it's right at 50%. There's the 50% number in cattle. So we'll go down to the 60-minute and see where we are here. Well, there it is. That's the retracement that we're having. So we have not had much of a 382 in here at all. You can see there's not been any 382s. There's a little tiny one right here off of that one. That from this here is 382, and a little on the way up, but not much up in here. This is why the resistance is there right at 50%. So cattle short and stop above there. But don't forget, now we've been going up for 2 weeks solid straight after this big bottom down in here. So that's why it's so bullish. People have asked me about the stop the music here, about the son of a gun. Give me a thinking, get my thinking cap on here. Oh, about the treasury bonds and inflation and stuff like that. Folks, all the bonds, first of all, we owe $38 trillion in debt, but no one ever thinks about who owns the other side of that debt. Most of it is owned by corporations and people that own that. China's not a big factor anymore like they used to be. So people have that on the asset side. So even though it's $1 trillion, $38 trillion in debt, somebody owns the other side of it. The problem is, you remember 4 years ago when they started feeding us tapioca there at the nursing home and said, this negative interest thing is going to really catch on big. You give us the money. Okay. Oh, I got that part right. And we're only charge you just a little bit for holding the money, but we can't guarantee that you're going to get your money back. After you think about that for a while, and it didn't go too well. It lasted about 2.5 weeks. Countries all over the world were pumping it like gasoline on Saturday night, and by golly, it didn't turn out to be a very good one, as a matter of fact. Okay, so that's what we're watching as we're looking at these things here today. All right, let's move on here. I got a list of things that I want to talk about. Let's switch over to the. We've only got a minute to go, but let's start out that way anyway. Let's switch over to the dollar index. If you remember, this was one of our focus things of last week. We'll get this up here on the daily basis. It was down at that 91 and change. And as you can see now, it's taken out the highs of the last few days in here, and it's held that level within 4 pips. We've had a nice rally. What we'll do when we get ready to come back from this next break is we're going to take a look at the pound, and we're going to take a look at the euro, and we're going to take a look at the Japanese yen, because all of these line up to where things should be going either up or down, okay? That's what we're watching, all right? And then we'll move on to the next one here. Let's see how see if we held up on that 382 in the old, let's see, looks like we did. Yeah, well, we're a tiny bit above it, and now we're starting to move a little lower. Let's see if the old Dow Jones, there's the Russell, it did the same thing. Hello, operator, where are you there in the old, can't find it. I got too many things here, folks, I guess. That's the way it goes. Hey, let's take a break, and we'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, this is the British pound. You remember we were looking at this just a few days ago. 50% retracement, 78, ABCD, everything lined up. There was your 382. So we had a rally here last night. So what we want to do is to go down to an hourly chart and see if it made a 382. Okay, here's where we are. Okay, here's where we are with the British pound. Now you see here, it pulled down, but it hasn't even equaled that last move right there. So we just about have right here. Okay, there's what we just about did. Okay, now this is the down move. See, this is the big sell point. We haven't come down very much, folks. This is not a disaster of any making at all. It's just a very, very shallow retracement, just like this 382 was right there. You can see it's almost exactly there. We start getting below there, then that's it. So we'll go down to a smaller time frame, and we'll see if we see anything that looked really interesting. So there was the move last night. There was where we were Sunday. Let's refresh this. I'm pretty sure we can get this up here. There we go. So there's where we were last night. We really didn't do very much. There was it early this morning. You can see there was a high that we made early this morning, and then all we did is we came down. Then we had a rally up, and we made an ABCD to the downside. So we're getting a lot of good action here in the British pound. A great one to trade, folks, if you like trading, and by golly, that's it. Now, we've made a new low, so we have to calculate if this is a 382, because what we've done is we've made an ABCD move right into a 382, okay? Unfortunately, it happens to be exactly a 50%, but the difference here is only about 20 pips, so it's right there. So let's take a look now at the euro, and we'll get it up here right now, and I want to bring this over to you. And where are you, euro? I know we were looking because we've been watching that all morning. Okay, here's the euro. We're going to get that up on the hourly chart, just like we did with the pound. There's where we were. Now, you remember we said we will get at least this type of move just like we did before. Remember that? I said we're going to get at least that, and that's what we got on Friday. And then look what happened. We had a little bit of a rally. Now you see things have changed a little bit because now you've broken more than you did. That means the trend has started down. That's what that means, because you started to take these things out. The first thing you'd want to be looking at is just clean some of this out so we can look at it for everybody that wants to walk through these. But you remember, we're watching these patterns like this. This is your ABCD that's running the whole show. There's your AB leg right there. That's your CD leg, and you have an ABCD in between, right? And that takes you right up to the promised land, just like this one does, okay? And that means that when you're looking at that, you're looking at a 3-drive pattern, drive 1, drive 2, drive 3, and there it is, just about exactly 1.618 as I recall. Let's see if I remember it. Yeah, there it is right there. There was a sell. Now we're in a downtrend. You see that? This is where we started the 4th. Okay, that was last Tuesday, and as you can, Thursday, I guess it was. Sorry about that. But you can see now that we are in a downtrend as of today. Okay, now there's today's action. We're in a downtrend because we have a 1, 3, 5 pattern. I think I did so much videos last night that I can't remember how many. Well, it doesn't make any difference. You can see this is perfectly symmetrical 1, 3, 5. There's your top, first high, second high. All right. Then all you want to do is to check the ratios. The first one you want to check is this one. You're going to see it spot on. 61, 50, it looks like, where is it at? Almost exactly 618. That means that this one will be just about exactly 786, verifying that these numbers are correct. And there it is, just about there. Look at that. That comes almost exactly to where we want it. There's your 618. There's your 786. You're in the downtrend, and you've already made your first objective on the downtrend. Look at this. There you go, from a high. Let's just do them together. AB equals CD, as my old buddy used to say. AB equals CD there. And then we do it one more time. Clean this out a little bit so we can see it. We got another AB equals CD that come down here, just made it just a little ago, and we're rallying back. Now, this rally will be important because this is an hourly. We've been rallying 1, 2, 3, 4 hours. Now, what are the odds makers in Vegas will say that might be a 382? Let's double check because we have lower tops, we have lower bottoms, and this is a rally. 1, 2, 3, 4 hours. Let's just see if it's a 382. No cheating over there, Johnny. Get the placard ready. And there it is. Just a little while ago, we hit it spot on. So those are some of the things that we're watching here this morning. Okay. I've got a list here of things. I covered the dollar index. I covered the bonds, the notes. John Jameson told me to be sure to cover the notes because the notes should be stronger than the bonds because they're a shorter time frame, and the shorter the time frame, the closer they'll be to the interest rates, and they're going to be raising interest. Let's try that again. Dropping interest rates most probably on Wednesday. If they don't, that'll be a little bit of a problem. But, frankly, Powell could care less because he's on his way out. And the president is going to bring in some of his own team. All right, let's move over here and bring up the dollar index. T is Treasury notes. There's your 20-year note. Let's get it up here on the daily, and we'll see here. Now, remember, this is 10 years and under, folks. These are the notes are 10 years and under. Open it up here. Oh, don't do that to me. Why don't you open up? Oh, gosh. Well, it might be behind here somehow. Yeah, I guess this is it. Yeah, my gosh, this is it. Hold on, this shows you how long I've been waiting to see if this darn thing is going to hold up or not. Let's just take a look here. You see, I haven't looked at it in quite a while. Let's refresh it and we'll get the prices up. And you'll see we are in a down move, and we are completing an ABCD here. I believe we probably completed it this morning. Let's just take a look at it. Remember, it's a lot different than the bonds, that's for sure. There's our AB leg right here. There's our CD leg right there. And there is our bottom right there. So we've made some type of a significant bottom here. All right, now two things are going to happen. When they say that they're going to drop rates, this will definitely rally. The question is, well, if it doesn't, it's in big trouble. But that's how they get these things moving. So you can see we're down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days down. Last time we were here, this is even more than that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days down. So we're at the maximum rate. Haven't really rallied very much yet, but we're in a zone where we certainly could. So let's just bring it over and see if we're at some place that might even be even better than that. So what we're going to do is got a lot of stuff in here because this is I show the charts because they chart beautifully, but we look at the bonds for trading, okay? First we'll change this and just clean it out so we can see where we are, and we go back to some really low levels way back in here. But we didn't make a new high above this, so you can't go back any farther than this. This has got to be where your patterns start, right there.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Go, folks. We've been over that head and shoulders pattern in the Treasury bond several times. Here it is in the notes. You can see left shoulder, right shoulder lower, okay? Head is right on. Let's just double check to see how much symmetry there is. It looks like it's pretty good. Don't get any better than that, I guess, within a day. Okay, so that's it. So that means we've got our low coming in now. We're making an ABCD, another ABCD right here. Now we need to go back and start to look right from here, because look at this big down move. Okay, that was a big cycle bottom back here on May 19th. So we're going to take a look at this. This will tell us what these interest rates might get ready to do. I don't know, but let's look at it. There's where we are. Oh, we're through the 382. Now that's a good sign, because you're completing. You have to do that. Well, you don't have to, but there's your move right here. I would not be too short the notes in here, folks, because there's your ABCD coming in right there off of that, and you're down 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Not many times you get that. You can see here, this is down pretty much the same thing, about 10 days or so. 10 days or so. This one's a little more, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is 15 days. So this is the area where you want to be looking to get long the notes. The last time we had a big move like this, and this is a big move, you got to go back to way back in here. There it is right there. That's the harmonic numbers that are involved in these bonds and stuff that you always ask about, okay? So that's it. I'd be getting ready to get long the notes or bonds. I picked the bonds because that's what I usually trade. So get ready, because we got that coming in. There's going to be a surprise. And remember, always use a stop, because when these things fail, they really fail. But we're setting at a really interesting spot. They're actually trading right at the 382 right now on the notes, as you can see here from this level right there. There's your ABCD. There's your 382 coming in here at 10. They're trading at 9. Taking out all the stops since November. Everybody that bought it during November now has a loss. Okay, and now look where we are right now. This is where you want to be buying. You see that move right there? That's going to be a telltale move, and we're probably there. Well, we are there because we just did it on a smaller time frame. Bozo, that's my pet chimpanzee that trades with me here. Actually does much better than I do. Yeah, there's it. Made it this morning. There it is right there. So I think we're getting ready to rally. How much will we rally? My guess is we should rally at least this amount right here, okay? And that's a pretty big run. See, this one here rallied just a little more than that. Here we were still bullish. It was still rallying, but we should get this much of a rally. That would take us up to this level right here. That's $1,500. And your risk here is just a few hundred. So you got a 7-to-1 bagger on this one if it happens. And believe me, when it turns, everybody will say, oh, why aren't I long notes and bonds? And I say, well, try a little ABCD. It might help your digestive tract just a little bit. Okay, now we got that out of the way. And move over here, get this out of the way here. And let's I'm trying to do too many things at once here. Let's just get this out of the way here. We covered the pound, the Japanese yen, Larry. Get the Japanese yen. That's the big one. That's going to be a surprise when they finally turns that one, but it's not ready to turn as of yet. Oh, we got to look at the Canadian dollar too, because that's dollar's in big trouble there. Okay, you can see here, look at the Japanese yen. See, it started to hold. See that right there at that 382? Look at this. It come down. It's still held. It's still acting pretty good. Still have one more run to the upside. Now, I have to refresh this because it's been 2 days since I looked at it. There it is, right? It went below the 382 for a little bit. Now it's popped back up. So we want to watch what's happening right now with it because that dollar index is critical. And this is number 3 on the list. You got the euro, the Japanese, and the British pound. Those are the 3 that set up first over because the euro is 53% of the dollar. The yen is about 20%. And the pound's about 16. So you add those together, and you're looking at pretty much what the dollar index is doing. So there's where we are. What we'll do now is we'll go down to an hourly chart to see if we've made a 382 today. I have to tell you that we have not. Well, I shouldn't say that because I didn't have the whole chart. There's your ABCD. Okay. There's your high. Oh, it is. It's spot on, I believe. Yep, it sure is. There it is. AB equals CD at the 50% level. Sorry, missed that one. There's your high. Your 382 comes in. Well, it's trading at the 382 right now. The difference here is 30 pips, $300. So that's pretty close. And the ABCD looks like it's pretty close to spot on. So let's look at that one. And you'll see there's where we are. There. Oh, boy. Right on the money. So that's what we're watching. Okay, you can see on the move down here on the 5th, the beautiful ABCD to the downside. Currencies are really fun to do, folks. And if you look at ABCD, there's not going to be much of a mystery. How much did that miss by? Let's just double check. Well, I missed it by a lot. So this is one that, it just didn't get there. There's nothing you can do about that. The fact is, the only thing you have is when you went below this low right here and didn't go anywhere. You see that big range right here after this big range down. This was John Hill's yum trade, and he followed it closely because his feeling was if you come down here this strong, once you've taken back more than 70, well, it's 80%. When you get back more than 80% of that, you do not want to be short because they've got you trapped. Right here, you have a pretty good idea that they might be, but right there, when it gets above 80%, that's the yum trade. That's one of Rich Anderson's favorite. So that's here you don't get a yum because it's just boom, gap up, and let's just double check just to be safe here. Nah, there was no gap. That's what I thought there was. Let's see if there was a 382 in anywhere in here that we see. This was just a 50% retracement. It's a little move here this morning, but I don't even think it was anywhere near 382 of anywhere, but we'll double check it from this low here. Oh dear. Yeah, there it is right there. There's your 382 off of that. That's let's look at it on a 30-minute because a smaller time frame we'll see. Yeah, here's what we were watching. There's the 382 right there that we were looking at. There it is right there. Bada bing, bada boom. Come on, don't be. Now, this one shows it's off. Oh, no, it's off by 1 pip. Pretty close. This one here is 50%. We'll draw that one in, too. So you'll be able to see this is the one from Sunday night. Here's where we are. This comes in at 50%, I believe. Yeah, there's 50%. Where does that tell you it's going to go to? Is up to the ABCD, and that's exactly where she went to, folks, right there. Bada bing, bada boom, and that's why it's coming back. I don't understand why people don't look at ABCD more often, but I'm glad they don't. Well, they probably look at it, and once it fails once, they move on to something else. That's what I'd be watching if I were me, okay? All right, let's move on here. Well, we're weakening up here in the Dow Jones. You can see here, there's where we are right now. But we didn't even look at the Dow Jones. Let's see if it did any 382 action here. This was when the high came in. You had a little bit of a rally here. Let's just double check from your high. Yeah, you made a lower low, so you have to count this one. Let's just double check. It misses a little bit. All right. Hey, we'll be right back. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, someone asked, 2 people asked that of all the stuff I was showing, what were the 3 most important charts we looked at this morning? I'll try to go through them quickly. This is the AD line. This is the volatility index, okay? The AD line, the second one coming up. 3 drive to a bottom pattern, perfect ABCD. Nobody's taking protection. It's already up 2% today. That's number 1. Number 2, when you look at this, is the AD line, the advanced decline. There's more issues declining than they are going up, as you can see here. That's non-confirmation. Okay, and then the third thing, which I think is probably the single most important thing, is the hello operator, New York Stock Exchange Index. All right, and the reason why, you have 1, 2, 3 drive to a top pattern. That's one of the best there is, folks, because you get above here, you know you're wrong. You can see here, drive 1, drive 2, drive 3, perfect symmetry. You see that? And behind that, you're looking at the Indian market is also making a 3 drive to a top pattern. Drive 1, drive 2, drive 3. So those are 3 that I think are very, very important. All of them I think are important because I spent the longest letter I've ever written for TFNN was this week, folks. If you want a copy of it, it's Larry Pesavento at gmail.com. Larry Pesavento at gmail.com. Or Larry at Trading Tutor, either one, and I'll send you a copy of the newsletter, all right? Now, we're coming into the holiday season, folks. Another couple weeks here. We got Christmas and all this stuff, and boy, I'll tell you, here in California, people are really in trouble. I told you what happened to me last Sunday when I having lunch at my breakfast, my usual Sunday breakfast at McDonald's, the big breakfast. I went to get some creamer. When I came back, there's a homeless person eating my breakfast, and the manager gave me my money back, and I smiled and told him to keep it. Anyway, that's what we're watching here. A lot of people are having a lot of trouble. I base all of this stuff here on these major 3 drive patterns that we're seeing here everywhere, ABCDs everywhere in the world. That's why we're in such a negative time, and the real bell will ring when they start asking for money back, and when they start and the stock people, the liquidity.
Steve Rhodes